The global economic collapse is underway. There's no reason to deny it anymore. Yet a handful of tech stocks have been doing well, that's for sure. But the actual economy is suffering. This isn't just the US, it's all over the world, with billions of dollars flooded into the financial system every month and having little effect. What will the central bankers do? Well, you came here for the truth, so let me unveil that for you today. I have so many economic indicators to show you, it's going to make your head spin. So sit back and relax. I'm going to try to bring this information to you as quickly and concisely as possible. I want to cover so many different things. The most shorted energy stocks have returned 30% in the second quarter. Take a look for yourself here. You can see that on the light blue line, that's the most shorted energy stocks, and in such a short period of time they have really accelerated. Look at oil prices, how high they have come. The energy sector itself has risen during this time frame, and it shows us what can happen in such a narrow band. Looking at all of the emerging markets has shown us that when times get tough, people start selling off of their other investments. They have primary investments, and then they may have their secondary and tertiary investments, and they seem to be getting rid of a lot of emerging markets now. They want to go to the safer locations, right? And that happens to be in the US, where I'll show you more of that in a moment. But in the stocks, bonds, and foreign exchange, you are seeing all of them declining at this time. I mean, it's really something to look at because it's becoming a heated issue within the news at this time. It's not just, for example, a handful of emerging market stocks. No, we are looking at the currencies. Look at South America, for example. You're seeing Argentina, Venezuela, and Brazil. Their currencies are all falling dramatically. We are seeing the stocks as a result as well. Bonds definitely are all coming down. Now, there's different reasons for each individual country, so I won't get into all of them, but I've been covering that issue a lot recently here on the channel, particularly in South America, also covered the Eurozone as well. Look at this here. So far this year, cash-rich companies have yet to issue in the corporate bond market. This is very strange, okay? Now, it doesn't necessarily mean that January 1st they may do that, but we're already in May, and there's no issuance. Very strange. So you'll look around in previous years, whether it's Apple or Alphabet or all the big names here, we're seeing none yet. So I find it to be quite unusual. So I'm going to keep my eyes on this, and I will bring you the information. I'm sure they will. It's just a matter of time. But we're here, coming close to halfway through the year. Haven't seen it yet. Global corporate balance sheets, at the bottom it says net. By the way, the next several charts here are from something that I show you regularly if you're new to this channel. Bank of America Merrill Lynch, they do a fund manager survey, and so that will be the next few charts. And you could see that the net percentage say companies are over leveraged, and we are now surpassed the point at which we saw during the financial crisis. That's for sure. I don't know how it looks going back to let's say 2000, but definitely. I mean, we've surpassed the financial crisis levels in pretty much every way right now. It doesn't surprise me to see something like this. When do you think the next recession will be? Is it 2019? Is it 2020? And it seems like 2019 is leading the charge there for a lot of people. They're thinking that, I think that they're very inaccurate in all cases, and usually their presumption is too far into the future. So if that's the case, we could be seeing this within a year. So I don't know what to say, but that's what they're suggesting regardless. Now, this is something, as I said, I show you regularly, and that time flies by because I remember covering all of these. I remember covering, where it was at first, long quality. Okay, then we had long NASDAQ, and that's not good enough anymore. You need to get more and more concentrated, more focused until today, long, FANG, and BAT. And if you know, recently Facebook got F'd. So as a result of that, it's not so much the F in FANG. Has been others like Microsoft and other companies that have been performing a little bit better throughout 2018, or at least there's been more focus on it in the media. looking at what has happened over the years, what I see is a narrowing band of choices. So suddenly you're thinking, you know what, I really don't want to invest in, let's just make an example here, a fictional tale. I don't want to invest in Brazil anymore. I'm just pulling all my money out of Europe. You know what, I'm just going to focus on the US. I'm going to buy some bonds. I'm going to buy some tech stocks, and that's it. And then they hold off, and then they see, oh, Facebook's not doing well right now. Okay, sell the Facebook, buy more shares of Apple, for example. And okay, narrow until there's nothing left. That's what's going on today. What do you think currently is the most crowded trade? Comparing basically May to April, how things change in 1 month. You can see the different examples here that in April of 2018, shorting the US dollar was definitely more popular than it is today. Shorting US treasuries seems to be the play right now. Long FANG is also not really necessarily, the cool thing to do these days, apparently. And that changes so fast, it's not even funny. Evolution of global FMS top tail risk, what they are worried about, and this happens to be the same issue all the time. And this word is the word that gets me. So we're looking at the Fed ECB policy mistake. Mistake means what their claim is that they would do something incorrectly, they would do it too fast. And I just have to acknowledge the fact that central bankers, commercial bankers, those who work at the investment companies, those who do wealth management, those who are invested in any which way, small or big, all of these players are all hoping that central banks continue to print money at least the current rate, if not more. They also want very low interest rates. That's not happening. You can see that in the US, they've begun this ridiculously slow level of tapering on their balance sheet, QT as is known. But we'll see it come down, they claim at a rate of $50 billion a month at one point. I don't know if that's going to happen or not. But look around the world. We still have something like $200 billion being printed every single month and injected into the markets. Is that not enough? Is $200 billion every single month not enough money to keep it afloat? It's absurd. It really is. What do you consider the biggest tail risk? Fed, ECB, hawkish policy mistake. Mistake, right? Trade issues were last month. That's not an issue anymore, apparently. You could see with the volatility index, again, dropping lower. There's no reason to worry. Let's just, I can't believe it. Anyway, I want to switch gears, looking at two companies here that have been making some changes to their portfolio, and I'm not making a point to either. I just want to let you know, because the institutional investors are not as important, I would say, as the central bankers and what they do, but it's still valid. It's still something that we need to look at. When you're talking about billions of dollars, it's something to pay attention to. And this is, I'm probably going to pronounce it wrong, but Stanley Druckenmiller, okay? He's managing billions of dollars here and recently has made some changes to the portfolio, okay? So they have been buying a little bit of Amazon, buying some Google, buying Facebook, PayPal, and others. Hey, why not? Everyone else is, right? But if you scroll down here, looking at this, everything in this pink color here is all of the ones I've organized by change in percentage minus 100%. So they basically sold off all of this. And you will see for yourself, they have sold off on, names that you'll recognize. Netflix, Nvidia, Visa, Las Vegas Sands Corp, looking at Expedia, looking at Citigroup, Bank of New York Mellon, looking at Alibaba, Activision, and others. So a few tech stocks, which I find interesting, and a bunch of others here. But I think the tech stocks shows us that they're narrowing their band, and that's something that I find to be worrisome, to say the least. It's just one company, of course, but I'll keep an eye on it and I'll let you know. This is another one, David Tepper, you might recognize that name, selling off, I don't know if it was 100% of the portfolio, but regardless, the change over here shows me 7.2%, okay? But I remember somewhere that it was selling off a large percentage regardless of what it's showing us on here. Also, a few others. I just wanted to show you that some people are in fact selling off of Apple, okay? This is another big company. Okay, a couple more and then we're done. US exports. This time period was when the US index soared 29%, and you can see the direction here. And when the USD has weakened, growth in exports surged. Something I talk about all the time, talked about it in my first book, definitely, but I've covered it here on the channel many times before. This happened in Mexico. They've done this and admitted to it, and it was successful. Okay, that was one very good example that we can use. It's been quite a while now, but this is a time period in which they found themselves in a predicament. Okay, they're in a recession. What do? Well, we can devalue our currency and therefore make exports cheaper. What happened? All of a sudden, hey, their currency's cheaper. To buy from them would be really cheap, available. All countries started coming in and say, hey, we want your products, we want your products, we want your products, buying it up and getting the economy going again. All countries like to do this to some degree or another, and you can see that there's been accusations going left and right and back and forth, but it is a fact. If your currency is cheaper, your exports are going to be more attractive. So this is what countries try to do. The same thing Switzerland did a few years ago after the Great Recession, where you saw their value started rising considerably, and they said, oh, our currency is strong, we don't want that, so we're going to peg it to 120 on the euro. Okay, these are very real examples that you can take to the bank or under your mattress. US inflation rate. This has been picking up recently. I mean, just take a look at what has happened since January, where the stock markets have been declining. So we're seeing the inflation picking up where? This happens to be the BLS statistics. You know, I think it's funny. Let me show you the next chart because it goes along with that. April 2018, the CPI is plus 0.2%. 0.2%, all right, in April. When I look at the statistics that I've shown you here many times before, I see a lot of manipulation in the way they do this. I mean, food inflation in the United States was showing either 1.6% or 1.8%, and that was a couple months ago. Do you believe that your food inflation, if you're living in the United States, is 1.6 or 1.8%? Is that realistic per year? Absolutely not. 1.8% per month? Maybe. It's probably more accurate. But not 1.8% in a year. It's just not true. And they continue to give us that information. So they show the 0.2%, and you know, the way that they calculate this should be considered to be an illegal act, because it is lying to the public. And they, just because of the group that does it, you know, they don't get in trouble. It's funny the way it works. If we did that on our taxes, oh, how much money did you make this year? $1. Yeah, $1. I made $1. And you just submit that, and they say, well, you know, I guess I believe you. It doesn't work like that. Or you drive through a red light. Police pulls you over. Okay, got you. Here, I'm going to give you a ticket now. No, I didn't drive through a red light. And then he's like, oh, okay, have a nice day. It's not like that. You can't just come up with your own things in your head and then that becomes the rules. That becomes the laws. If we're all going to do this, we have to do it. If they have to abide by it, if we have to abide by it, why don't they have to abide by it? It's just the way it goes. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel very much. I do really appreciate that. I have, a pile beyond imagined, just it's crazy in my inbox right now of emails. I promise I will get to every single email. It will take me some time, but in the coming weeks, in just a few weeks, all those emails will be replied to. And in the future, I'm going to be setting aside time every single day to make sure to get a bulk of those emails that come in to get replied to regularly. So you will not see this delay in the coming weeks. After that, I'm going to definitely clear them up, and it will stay like that. Okay. If you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you got to do is go over to Amazon. There are links in the description of this video. You just click over there. It'll bring you to the Look Inside feature, where you can actually flip through the pages of these books to see if you like them. Take care.